In this video, we'll delve deep into the world of flexible lifetime mortgages. We'll cover eligibility, pitfalls to avoid, repayment options, and explain how a flexible lifetime mortgage actually works. Understanding lifetime mortgages. To truly grasp the concept of a flexible lifetime mortgage, let's first explore the fundamentals of a lifetime mortgage. A lifetime mortgage is a type of equity release plan designed specifically for senior homeowners. It allows you to access a portion of your home's equity without making monthly repayments. Qualifications and process. So who is eligible for a lifetime mortgage? Well, if you're at least 55 years old and you own a property with no outstanding mortgage or secured debt, you may qualify. However, some lenders may set a maximum age limit, typically around 85. To get started, the lender will send surveyors to assess the value of your property and determine how much they're willing to lend you. Purpose and pitfalls. Now let's talk about the purpose of a lifetime mortgage. It serves as a means for older individuals to access a tax-free lump sum, which can be used to enhance their retirement years. Whether it's improving your quality of life, funding annual holidays, home renovations, or even supporting loved ones financially, the choice is yours. But it's important to be aware of the pitfalls. Not fully understanding the commitment, neglecting alternative finance solutions, and underestimating the consequences can lead to financial complications. Lifetime mortgages can be expensive over the long term, impacting the inheritance you pass on to your family and friends. Repayment options. What if you change your mind and want to repay your lifetime mortgage? Well, you do have options. You can repay the entire loan and any interest to exit the credit agreement, but be prepared for early repayment charges. These costs can be quite significant, especially considering that lifetime mortgages are designed to last a lifetime. However, some lenders offer reduced charges over time, or even 0% after a certain period. Alternatively, you could choose a flexible lifetime mortgage, which brings us to our main focus. Introducing the flexible lifetime mortgage. A flexible lifetime mortgage operates similarly to a standard lifetime mortgage, with one crucial difference. You have the freedom to make voluntary monthly repayments. This feature allows you to pay off some or all of the interest charged each month. By repaying the interest, you can ensure that the amount owed remains the same, resulting in a lower debt when it's time to repay the loan. Benefits and examples. So why would you choose a flexible lifetime mortgage? By repaying the interest, you increase the likelihood that your loved ones will receive a more substantial inheritance. It can alleviate the guilt some parents may feel about using equity release and potentially denying their children the family home. Plus, if the debt is kept low, the beneficiaries may even have the option to pay off the lender with cash and keep the property. Let's look at an example. Say you take out a flexible lifetime mortgage of £50,000 with a monthly interest rate of 4.5%. By repaying the interest each month, the debt will remain at £50,000. Therefore, when it comes time to repay the loan, only the initial borrowed amount of £50,000 will be deducted from the proceeds of the property sale. Interest rates and calculators. Now, you may be wondering about the interest rates on flexible lifetime mortgages. They can range from as low as 2% up to approximately 8%, depending on factors such as your age and the property's details. To get a better understanding of how a flexible lifetime mortgage might work for you, many lenders provide online calculators. These tools allow you to input the desired loan amounts and specify how much of the interest you'd like to repay monthly. The calculator will then provide estimates of the total debt over various time periods. Exploring other options. While flexible lifetime mortgages offer great advantages, it's essential to know that they're not the only alternative to standard lifetime mortgages. Let's briefly touch on two other types. Number 1, the drawdown lifetime mortgage. With this option, instead of receiving a lump sum, you're given a drawdown facility to take smaller regular payments over time. This can be beneficial if you're concerned about potential impacts on means-tested benefits. Number 2, the enhanced lifetime mortgage. Designed for individuals with poor health or serious medical conditions, this mortgage allows you to borrow against more equity. The lender takes into account your reduced life expectancy or the time before your required residential care. It's commonly chosen by those seeking additional funds for top-quality healthcare and improving their quality of life. Understanding equity release. Now let's clarify the distinction between a lifetime mortgage and equity release. While a lifetime mortgage falls under the broader category of equity release, not all equity release products are lifetime mortgages. Equity release can refer to another option called a home reversion plan. In a home reversion plan, similar to a lifetime mortgage, you release equity in your property without making monthly repayments. However, instead of charging interest, the company claims a fixed percentage of the future sale proceeds, usually exceeding the initial loan amount. It's crucial to consult a financial advisor before considering equity release, and only choose lenders authorized and regulated by the FCA, the Financial Conduct Authority. Remember, a lifetime mortgage is a significant financial decision and allows you to access the value of your home while retaining ownership. However, careful consideration is crucial, as it will reduce the value of your estate and could impact means-tested benefits. Always consult with a professional and explore your options thoroughly. If you're interested in seeing if you could release equity, then simply click the link in the description below and fill out the short form. It contains a few questions like your property value, your date of birth, and it will give you access to quotes tailored to your circumstance. It's totally free to fill out, and of course it won't affect your credit score. So click the link in the description below and fill out the short form to try it out.